Oh, welcome to the next episode of Venture Central, or rather interview. It's Michał Olszewski and Arek Hajduk, your favorite hosts, and we'll have a guest in a minute with us. But first,
Yes,
Michał.
yes, we'll have a guest, and as you noticed, probably already episode is in English, so the guest is foreign. Nice. But yes, before we get to the interview part, please remember to support us. First way to do it is to buy us a coffee using this QR code. The link is also below the video, so that's the first option, and the second option is to support us by buying supplements from Nicolab. There's a discount for you, so it's a better way to buy them through us, and it also helps our channel. So whatever option you choose one of them, and yeah, let's get into the
You, you,
interview.
you can
Arek,
also obviously like, subscribe, and send to your friends.
I think that everyone who watches us has already liked and subscribed. If not, yes, this is the this
This
is
is the
the
way.
right moment to do it. Arek, who is our guest?
Let's invite Miroslav. Hi, Miroslav.
Hi guys.
Nice to have you on Venture Central. We invited you because of the investment you did in Poland, and we will talk about it in details. But let's
Fresh
start
news.
with your introduction. Who are you, and what do you do?
Thanks guys, and happy to be here. Yeah, what do I do? My first and only job right now is principal partner at Momenta Ventures. Uh, Originally in New York City, moved to Europe to really focus on Central and Eastern Europe and the wider European region. We felt like doubling down was important. Uh, Before that, was born in Czech Republic in a pretty blue collar town. When I was 5 years old, got shipped over to America, lived there for next 30 years, doing startups, working in IoT, things like that, and making sure that always there was some kind of hardware, software, data component in what I did. And I always realized that the smaller the company, the better I felt. So always wanted to do that, and eventually realized that the best way to scale that interest is to be a VC.
So that was natural shift from you, from the operator to VC, because those are two different worlds, right?
Yes, like a lot of my work in as an operator was also looking at M&A opportunities and startups as well, along with product and go-to-market fit. So I was always at the edge of the innovation curve, trying to get the corporates to incorporate more innovation. And uh, my dad, was Czech, and he also looked at businesses from the very beginning. Once privatization happened here in Czech Republic, and I think his first company that he somehow found money for was like a failed cigar company, and he always told me you have to be in business and ownership, and so it was always a dream of mine. Somehow I got into VC. Uh, if I was trying to plan out this path, it would be impossible, but luck was on my side.
Yeah,
So you're a Czech VC or American VC? How you identify here?
Yeah, so Momenta is headquartered in Switzerland, but has a very strong American identity. We have partners in Silicon Valley and such. For me, I thought there wasn't much of a difference, but the more I spend time now here in Prague, the more I realize I'm very American, and I think most people would label me American VC.
and why? What's the difference between Czech and American VC, or European for that matter?
Yeah, good question. I think a lot of Czech VCs or European VCs are actually private equity and are pretending to be VCs. So that's I think that's the biggest difference is
So in terms of
uh,
risk taking, right? Or
risk taking, founder friendliness, appetite for zero outcomes, uh, things like that. We're a little bit on the edge because we're so focused on industrial tech, But even then, the difference is quite obvious.
Okay, you said industrial tech, but you even say about Momenta as a industrial impact company, not a VC. What that translates to?
Industrial impact for us connects all of the automation, digitalization that we see in industry, but also connects it to the people and sustainability. But to be honest with you, every startup uh, in manufacturing tech is sustainable and people focused, because either it's reducing scrap or reducing energy or creating more efficiencies or making the job easier for the human. So we care about that a lot, but actually, all these startups have it de facto as they create these optimizations for manufacturing companies.
I
Hmm.
think I found some info that you operate in, let me quote, Industry 5.0.
hmm
What it, like it sounds, sorry, it sounds like a buzzword. What is it? How to decode that?
Industry, you should. Industry 5.0 is actually a EU-driven initiative, or originally was, and literally it's connecting industrial innovation with three pillars: sustainability, resilience, and people focus. So that's all it means, really. But startups are naturally kind of geared towards those things anyway.
Hmm. Let's stick for a moment to Momenta, because your LP is a huge corporation, right? Like Rockwell is your largest LP. Uh, what doesn't gi- what does give you is there any edge in having such an LP?
Yeah, so Momenta, maybe the context there that's even more impressive is Momenta's been doing only innovation in industry, mostly automation and digitalization for about 15 years now. Before it was cool. And all of our VC, all of our LPs from our five funds are strategics. So in the earlier days, it was Semtech, which is a LoRaWAN provider. Then it was Advantech, which does edge AI connectivity. And now in the newest fund, like you mentioned, it's Rockwell Automation and Nippon Steel Solutions out of Japan. For us, it changes everything. Uh, we hear deep tech VCs a lot. We ourselves don't really brand us like that, but because we feel like being a deep tech VC, but then being broad across all deep tech segments seems impossible. How can you be an expert in quantum and biotech and nuclear at the same time? So for us, it's really that really deep focus in industrial tech. All of us were operators in industry or have enabling technology experience in the past. And our LPs talk to us every other week. And it's specifically important because it's at the tech side. So, for example, at Rockwell, we talked to Scott Miller, who's the head of advanced technologies, and Jordan Reynolds, who leads their AI and autonomy. And we get to have those conversations about not only startups but the ecosystem on a regular basis, and that gives us the edge, I think.
Hmm. So this is a pretty close connection. Does it translate also to your portfolio and cooperation with them?
Yeah, one of the things that we really want to focus on is this concept of co-creation. So we want to make sure that prior to investment, Momenta and our LPs can help the startup in some way, whether it's commercial or technical or expansion to the US or even Japan now. So that's really important for us, right? That co-creation aspect. There's actually a giant office here for Rockwell in Prague. It's about 165 people, So we like that connection there, and we just feel like this is the way that makes the most sense. It might not scale. We might not be a $500 million fund, but I feel at least that we give startups a little bit more than the average VC.
Mm. When you say industry and hardware, that always I can see big numbers, but you invest on a very early stage, and you don't give large sums to startups. That means that you have to, yeah. What do you have to do to be successful then?
Yeah, our tickets range between $500,000 and $2 million. Usually at seed or pre-seed, sometimes Series A in Central and Eastern Europe, but that's relatively rare. But I think the way we succeed is we get on the board, we have guidance, we're very founder first, we understand the language, the customers, and we can guide towards a successful next round. Just the fact that we occupy a space on the board that otherwise maybe is occupied by a banker or some other entity that's more generalist, I think is a huge benefit. We're not asking them about the interest rates or anything like that.
Because are you different board member then? you know, so asking the right questions, not the stupid ones. I mean, just to put it bluntly.
Yeah, I hope so. Most of my founders enjoy talking to me. My favorite is, and I've heard this quite a few times, like, you're the only one that gets us. Sometimes we hear that after the first pitch call, and sometimes it really resonates, a year or 2 years into investment, where we are able to, sometimes the founders want to do controversial things, and if a VC is not used to the industry, they might reject that and be more safe. And it is our job to make sure that the founder gets the optionality to do the right thing.
So you're based in Prague, right? So
Correct.
that feels like CE and the area. It's kind of important for the fund. How it looks like, you have lots of portfolio companies from the region already, or this is future bet?
Yeah. So originally worked out of Boston and New York City. My partners are localized all over North America and Europe. So Switzerland, Ireland, San Francisco, Seattle, places like that. Now I moved to Prague. We hired a associate here, so we're trying to double down. In my personal portfolio that I lead, I have two C startups, Surveily, like you mentioned, in Poland, and then Spray Vision in Czech Republic. Actively in the pipeline, we have CE startups, but we're not solely focused on CE. So if we invest in something in the region, it won against French companies, UK companies, American companies in the pipeline process. A lot of my other startups across robotics quite often are in Switzerland, Germany. I have a few in America, and it looks like we're about to invest in one in Boston that I'm leading. So we're pretty global. The fact that we have LPs in Japan and Taiwan and the US means that we have to stay up anyway. So it's not really a regional thing.
Does it really mean that you work like around the clock, like all the day? You could be in touch with your LPs in Japan and then with your US team, and then there are investments in Europe. So when do you sleep?
I never work as hard as a founder does. So there's always someone working harder than you, but we try to be more American about that.
You're in a business that promotes cigars, so you cannot work too hard. Okay, Miroslav, let's switch maybe to Surveily, or first, what is, if there is no discount on CE, right? We invest in CE because it's emerging market. We invest in best companies, and maybe they will come from CE. Then what is the thing that brought you here? Why not stay in US and look from afar? What is special here that you're looking, and how it translates to your investment in Surveily? What caught your attention?
Mhm. Yeah, so first of all, this part of Europe was always an industrial heartland. We feel that way. Rockwell feels that way. So we like to invest in this country and this region. There's tremendous talent here, especially on the technical side. It's relatively affordable. And I think what makes me like this region a lot more is if you do find those outlier ambitious founders, a year or two after investment, they're expanding to the US, and then they have a two-step approach where they have maybe the technical team here in Europe and then the sales team in the US, and the value for that investment tends to be very good, especially now in the world of physical AI hype, which we're getting used to. Uh, America can, especially Silicon Valley, can have some outrageous valuations, and it hasn't quite reached here yet. So dollar for dollar, you get a lot of value here, and uh, we love to see founders that have more global aspirations as well.
So how did you find Surveily? Well, how it appeared on your radar?
Yeah, the benefit of being only focused on industrial tech is you basically see the whole environment at once, and nothing really slips by. So uh, if you don't make an investment, it's really your fault, and you can't blame anyone else. Surveily, we like actually 2 years ago we saw them, uh, liked the technology, liked the founders. Not the product, but the go-to-market was not quite there yet. They were still trying to figure out how to sell. And then they came back about 9 months ago. Really, the founders found how to sell the product to resonate with the customers, and we felt it was the right time to give them a boost.
But
So
you,
they're
you've
they're 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 going global. They're getting master service agreements at large companies now. Uh, it's a little bit of a culture shock for them, especially negotiating, because I guess local Polish people are a little bit less bombastic than you'll find in other places, but they're learning that sometimes you have to deal with people that are more crazy, but actually don't mean every word they say.
That's interesting cultural differences. But you met them because they approached you, or you were monitoring prior investments of VCs? Because Surveily was in a portfolio company of Polish funds, right?
Hmm. Yeah, we use PitchBook, and we scan the whole industrial arena, and then we make sure that we talk to everyone in pre-seed or seed, make sure we have good understanding. Uh, because we tend to have smaller funds, but more of them more often, and our LP structure is such where we only have a few LPs per fund. We have a large database of startups, and they might not all be relevant to the very narrow focus of the LP at the time, but maybe the next fund might really want those things that we saw maybe a year ago. So we try to have a wide mapping of every startup in the industry, and go back to them frequently if we feel like our thesis has now changed to fit them, or if they've matured enough. So that's how we found them. Just it's all outbound, and again, it's a small world, right? You have maybe 6 to 10,000 industrial startups in total.
So
Okay,
how
but
many?
you
How
have
many in Poland?
chosen them, right? And why are they special? What's the reason why you invested specifically in that company?
Hmm. Yeah, the team, super ambitious, globally minded, American-like, I would say. They understand that you have to understand the customer to grow. Beyond that, on the technology side, their architecture is edge native, like offline edge native first, and they built up from that into a hybrid cloud structure. So they're getting all of the benefits of being a very streamlined platform that doesn't need that much bandwidth. And in a world where now you have to be closer and closer to the machines, to the edge, in order to run AI agents and other things, uh, the benefit of that architecture is now forming dividends, whereas their competitors are cloud first, and you could really see their models break. Their technical debt is really weighing them down as we go more and back into the edge, ironically. So that for us, that was really important. They're getting a bunch of traction now with global brands, and it felt like the snowball effect was about to start.
Hmm. There is I've read somewhere that there is expectation that there will be some local co-investment apart from Momenta. Is that right?
Yes, the NIF, the Polish NIF is joining us in a second close, so not public yet, but they should be done this week.
Okay. So you heard it first here. How's that important? The local partner.
You know, it look, it's good to have validation from the local ecosystem. I don't think it makes much of a difference for us, whether it's a local partner or a foreign partner. We kind of view the space as one landscape. It's just industrial tech in North America and Europe. And we don't do this regionalization that I see a lot in Europe, where it's like, oh, we only invest in Stuttgart, or we only invest in Bavaria, or like for us, if I'm co-investing with a Polish partner or a Czech partner or a French partner or a German partner, it all feels relatively the same to me. Uh, Regulations are a little bit different country to country, of course, but yeah, I don't view those differences. So maybe I'm the wrong guy to ask.
Okay. So you said about cultural shock that the guys from Surveily experience. What is the hardest thing about taking like a manufacturing B2B startup from Wrocław, Poland to the largest companies in US?
In the US specifically, the problem is that most European startups pretend to be tourists. So maybe they do like, oh, I'm going to Silicon Valley for 3 weeks, and then they come back, they write the little LinkedIn post. I was there, it changed my life. I'm gonna be a 10x founder now. And our approach, especially because we're industrial, is hey, you don't have to be in SF. You can be in Pittsburgh, you can be in Detroit, you can be in North Carolina, be near your customers. And actually, in a way, it feels more like home, right? It's a less of a culture shock for European founders when they're in the second tier cities, and the unit economics work better. They don't have to be all or nothing right away, and they can just really focus on the customer path. But they really need to, and this is part of our criteria. Our founders need to feel comfortable with saying, "Hey, I'm going to move my family for 6 months to America eventually, right? And maybe I'll stay there for 5 years or 10 years or indefinitely." It's not I'm gonna go, I'm gonna see the thing, I'm gonna get a few customers, I'm gonna come back to Poland, and everything's gonna work fine. That never works out really. So for us, that's the big piece, is you have to just be there. And America's huge, but they can feel the proximity. those customers. And
Okay,
so
so the path that you expect from your portfolio companies is that they will be big in US, right? Or it's possible for some companies that they will stay, on this side of the pond.
most of them have to go either to US or Japan or friendly Asia countries at some point. And that's why I like CE as well. Like if you fund a Czech startup, they can't survive, or they shouldn't be able to survive just living in Czech, or even a German startup, right? Like the scale you need to service industrial customer across all their factories requires you to be global, because if you become a standard in their stack, they're going to say, okay, well, be in all my factories, not just in these ones in Poland, because they want the data to converge factory over factory, and they want to be able to compare things. And so it's just inevitable.
The same goes for Asia, or US is the promised land.
In some fields, I think Asia, especially Japan, have a lot of like productivity and gains there. The Japanese people seem to be very welcoming to European startups. I mean, there's obviously cultural and language barriers, but the amount of welcoming we're seeing our startups get in Japan in particular is really significant. But usually, unless you have some kind of in with Toyota or something already, you start in the US because it's just a easier market to enter and larger per dollar. But it's very easy to waste $500,000 and not see any results. So you have to. What I feel is the problem, and the recommendation that a lot of our founders get from others is enter America, but do it carefully. And by saying that, you actually made it much more risky. Yeah.
So you have to go all out there, right?
Yeah, go all out, assume you're gonna lose the money, and really like go for it. This do it carefully thing, it translates to do it halfway, and then it just breaks over time.
So as we are on the advice part, maybe here, lots of or some of tech founders are watching our video. What should they do to approach you, or to get on your radar, to get cited by you? What's the best way for them to do so?
I talk to every founder that sends me a message on LinkedIn, so it's pretty easy.
Okay. And then what?
Well, then we talk. You send me your pitch deck. We have a first call, and if it works, then I'll show it to the team. A lot of industrial tech just ends with me saying, "Hey, this is not our thesis right now," even within industrial tech, right? So, we look at 1,000 companies a year, and we invest in like 6 or so new ones. So, look, you might have a really good company that's doing, agents for design of CAD or CNC machine designing. It's too far away from the runtime in the factory floor for us at this time. So like, just because I say no doesn't mean your business doesn't work. It just means that we're hyper focused on a few themes within industrial, depending on the funds that are active at the time. But yeah,
the link to the link to the LinkedIn will be in the description of the episode. So if anyone wants to try their luck, it's super easy.
I find it strange. We've created this hierarchy in Europe where the investor feels so far away from the founder, and I believe in a more flat approach. Like, obviously we're investing money, but we also are getting the privilege to invest that money in the right startups. So I never understood VCs that would ignore founders in the inbox. It just feels counterintuitive. Like, what if that founder, their second or third startup is really relevant to you, and because you ignored them the first time, now they don't want to talk to you.
Yes, it feels like you're more American. I agree. but Miroslav, what are the deal breakers for you? When the founder is approaching you and sending you the first pitch, what are the red flags that you cannot forget?
Yeah, the biggest one, and this happens more often with American startups than European ones, is they've never been in a factory. They've never talked to a customer. They just take an IT approach to manufacturing and assume it works. So that's the biggest one. The European red flags tend to be basically a lot of like government grant zombies, where it's an academic science project for 5 years, and they look at their plan in the terms of how do I get the next grant instead of how do I sell this to a customer. That's a big red flag for us. The other piece is when it just feels like a feature and not a full solution, something that actually creates an outcome for the customer, not just this is a cool thing you could plug in, right? Like the customer, especially in manufacturing, needs to feel the impact quickly, because the unit economics are just so brutal in this industry. And then thirdly, like if the customer says, hey, we're gonna be in Europe for 10 years and then we might expand later, that's a no for us.
Okay, so as a former founder of a hardware startup, I check all your red flags, all your European red flags. So
we
See?
we actually like hardware enabled companies, but there has to be something proprietary you can sell. So the hardware just enables the collection of something that becomes more valuable over time, whether it's data or a recommendation or something else. So that's how we think about it. The hardware seems to be more and more of the feature and not a bug, because software is getting eaten alive, or pure software seems to be getting eaten alive. So we enjoyed those companies, and Surveily has a component of that we enjoyed as well.
Hmm. We touch a bit on AI, so I would like to expand on that. What's the impact of AI, but the real one, not not the LinkedIn post level, but the real one on manufacturing tech?
Yeah, so when you think about it, there's PLC control, which has to be deterministic. That's the engine that tells the machine what to do, when to stop, faster, slower, things like that. That always has to be deterministic, right? And for us, actually, AI was less relevant or hard or around the edges. So you'd have like, oh, a chatbot that talks to your maintenance guy. For us, that was less interesting. Where now over the last year, and we were just in Hannover Messe, and it's quite apparent that there's a lot of movement in that direction, is on the actual AI agent side, where you have either a very specific process that can be near closed loop. Think like optimization of blast furnaces or something like that. Very, very specific variables with dynamic changes. Usually takes an expert of 30 years to do it. You can sort of train the AI to do it semi-deterministically, but you always have that PLC that makes it fully deterministic, right? And reasons about what the AI is saying. You can never just have an AI decide to do things, right? Because things will blow up. But if you think about, LLMs as creators of language and coding as a language, well, yes, the LLM might output something that's not deterministic, but the code itself that it creates is deterministic. And then the PLC can talk to that code in a way that feels like a traditional way of doing things. And so we enjoyed those things. That's why edge is so important for us, because you need that latency or no latency, and you need to be always on in those kind of systems where now you're not just recommending, but you're quasi decisioning.
I wonder, because very often we hear that, okay, it's AI, but we don't know what happened, inside the box, right? Is there any place in manufacturing for this, magic? No, I mean, you have to understand, and even if you don't have this guy of 30 years of experience, you have to understand the every step, right?
There is, the further you move away from the manufacturing floor, from production runtime, you could get away with that a little bit. But yeah, in general, like for example, if you have a robot, you could have LLMs on the robot that says, hey, like avoid people, right? But that's an outer layer. And then in the middle, you still have that certified safety system that stops the robot, and that's pure deterministic and probably and definitely not AI created, right? So you can create bubbles around traditional systems, but replacing those systems is almost impossible, or at least for now.
What's the hottest or most promising area that you can invest? You think you're already investing in or plan to invest in? What's the what will be the craze in a few years in this?
Yeah, for us, it's closed loop optimizations on the agent side, on the edge. Robotics is a bloodbath. So you have to pick and choose there. It's going to change the world, but it's unclear how to invest into that space. For us, it's really, if you think about automation to autonomy as a journey of a bunch of steps, and we started with like analog machines doing yes, no functions. We've been on this automation to autonomy journey for like 80 years, 90 years, and we're just getting closer to it, and more variables and unknowns could be hit a system without the system breaking, and that's how we get to autonomy at some point where you have a lights out factory. But then the other piece is, okay, do we have that combination of digital twins, robotics, and control working in a unified way? And we already see that at like the robot level and sometimes the automation cell level. So this automation cell spits out copper wire or something, right? But we haven't yet seen it where the entire factory becomes the automation cell and you can coordinate the complexity of an entire factory. There's just too many variables right now for the systems that we've created to work reliably. But yeah, like control and what Rockwell does and Siemens and those companies do is always going to be that nervous system and backbone. And then it's, can we create IT-like approaches, whether it's like with the help of Microsoft or AWS or Capgemini or these guys, to attach the AI apps, industrial apps, onto that nervous system and create wider systems. Before, that was really manual, it was siloed, it was OT, right? You couldn't really do it at scale. With agents, it feels like one of the first times where we can have an IT approach in operating technology environments.
When we talk about IT, there is always component of cybersecurity. You never mention it, and with this world that we live in, I
Yeah.
believe that this is relevant. How do you see that?
This one actually goes in reverse. So in my opinion, OT cybersecurity is actually very strong. And now all these other environments, like think of a hospital, for example, used to only have IT. Now they have OT like cybersecurity because they have so many connected machines, robots, all this, potentially robots in the future, all these things. So you're seeing OT level security and techniques being now applied to IT security, and it just continues to show how IT and OT is converging. But yeah, I mean, it's a big problem. We saw it, 10 years ago when everyone had IoT sensors in their factories, and then everyone realized, oh, like none of these are really secured. Anyone could just plug into these and take data out. So we're starting to get a little bit smarter about these things, and it's just going to be forced by how you no longer have to go into a factory or a very securitized zone to mess with these things. Now they're like around the corner in your hospital or in your grocery store, and you could do a lot of damage to a whole network by accessing one sensor or one gateway. So I agree. It's definitely a use case. We'll see how it shakes out.
What about physical security? Like, I don't know, anti-drone systems, for example, in a factory. My imagination just goes wild. When I read
Yeah,
the news. So
we do see we actually saw a startup that's passively using radio frequency to passively detect drones. The problem is not the detection, but the reaction most of the time, right? Like, so you'll detect it, but then it's too late to actually intervene. But yeah, that's for the defense tech guys to figure out. Where we like
That's the other part of Rockwell, right?
well, Rockwell tries to stay away from that, but I mean, Czech has a big history with defense tech now, and our richest human is a defense tech guy. But we like to say any automotive factory could become a defense tech factory in 6 to 9 months. So we're adjacent to it. Some of our startups go into defense tech afterwards where it makes sense. But we really want to focus on how it works to improve industry first.
One more question about the industry and startups there. Yes, the most news that we got about startups becoming unicorns and getting lots of traction, etc. Those are customer facing stuff or some AI things, whatever. And from those automation manufacturing stuff, this is like, I don't know, maybe they never reached that stage, or they never published that they are so successful. You're still waiting for some very publicly visible successes in that field.
Hmm. Well, the first thing to say is that the biggest and best manufacturing startups don't end at manufacturing. They create some kind of critical solution that works very well in manufacturing and then applies to a broader industry at some point, right? So you see those examples, you just maybe don't think, oh, that's a manufacturing startup or industrial tech startup.
can
But
you
the
give
other
us an
pieces,
example?
sure, like Augury, or like in a way, even like Palantir can be viewed that way. But the other pieces, if you broadly look at physical AI, you're seeing billion-dollar valuation seed rounds, right? Or in robotics, in physical AI, world models, all that stuff, and most of that stuff is very relevant to industrial.
Okay.
But yeah, you're gonna get $500,000 to $1 billion outcomes most of the time. Most of the time they're selling to a strategic corporate, and the revenue is very sticky, but usually grows a little bit slower. So it helps because like you don't have a lovable problem where it grows really fast, but then it plateaus before you can sell the equity. But yeah, you have that. I mean, that's our biggest risk is the founder is too academic. They don't know how to sell the thing. They grow, 15 to 30% a year, and we have them in the portfolio for 20 years before they sell it, right? That's always the risk. We try to avoid that with the red flags we mentioned before. So industry is hard enough. If you want to be an industrial tech company that stays in Germany forever, you're making things hard on yourself for no reason.
It seems like you're not following, VC fashionable investment waves, if you know what I mean, right? I mean, you're sticking to I would say less sexy part of it. Is it something that it's built in and will never change?
We're always going to do this, right? We were doing it 14 years ago when it wasn't sexy. We're doing it now. It's a lot more sexy now. The amount of generalist VCs that come to us and ask questions because they want to invest in the space is growing rapidly. But for us, it's a work of passion, right? All of us were in industry at some point. We like the physical. We like more practical things. We like to be able to see the outcomes and how our companies are helping actual people. And it's a lot easier to do it by investing in manufacturing tech than if you're investing in fintech or some other type of industry.
We have this tradition that we ask our guests same three questions. All our guests receive those same questions, and like we enjoy simple answers here. Like whatever first thing comes to your mind. Um, I'll start maybe. This is a simple thing actually. Uh, what's unique about you? Why founders should choose you? What's your unique value that you provide to the founders, to the startups that you work with?
Yeah, for me, it's I just understand them and their pain, and I don't try to be their overlord. I try to be their friend or their partner in this thing, and I understand that the risk they're taking is much bigger than the risk I'm taking every time we engage in this thing.
What's your anti-portfolio? What ran away or you missed it?
Yeah, good question. The problem is, I feel like that question is a problem because sometimes you think something is your anti-portfolio, and then they raise $100 million and then they crash and burn, and you thought, oh, I missed that, but then actually it's
I
good.
was right from the beginning.
For us, it's less obvious because you don't have those giant outcomes that are super public. And we've been here at the beginning, so we've had the choice to see everything. So like, for example, in 8 years ago, 9 years ago, we invested in Litmus, Highbyte, Edge Impulse, all those things that now if you go to the Hanover trade show, they're all the big booths, right? And so we had our pick and choice back then. There was not that much VC interest. So I can't think of anyone that's like very standing out to me. If anything, it's always like we should have invested more in the things that we looked at. So I think we would have loved to invest in those. One that's relatively early, and I feel like I should have invested, or that we should have invested in it, but we'll see, is called Aris Machina. It's a European startup that does ontology and unified namespace for industry, and that one seems kind of interesting.
Interesting that the answers that we get from specialized VCs are different than generalists, because specialized, they say exactly what you say. You never know whether it's a good anti-portfolio or bad anti-portfolio. So it's interesting.
The
Michał, the last
generalists
one.
have it easier. Yeah, the last one. This is a fun one, and this is not necessarily about investing. You can just let your imagination flow here. What's the thing that you believe in that most of the people don't believe in? Your contrarian point of view.
Yeah. I'm not sure if it's contrarian, but you're always gonna be unhappy wherever you land, right? So I'm in Prague, it's lovely. There's certain things that bother me. Like there is no nirvana, and you should just kind of accept that and be okay with the 80% that you enjoy. And stop trying to chase better. Yeah.
Okay, the grass is not
Not sure if
greener.
that's contrarian, but yeah, just live in the place and do the thing and make the best of it, and hopefully good things come to you at some point.
So
Nice.
actually, you can phrase it in that way you said it, or just be content with enough. That could be the good way of phrasing it.
I disagree with that.
Okay, perfect.
That's too communist for me.
Okay.
But no, like just use the soil you have and grow something amazing out of it. Don't always say I have to have the best soil and I'm not gonna start before that, because there is no best soil.
Miroslav, thank you for those words of wisdom. That was the last question that we had for you, and I really enjoyed the conversation because you were always straight to the point, and that's I can feel like you're talking to the startup, and you're not wasting anyone's time. So that was
Yeah,
indicator.
hopefully.
Yeah, thanks. That was great having you.
Perfect. Thank you.
Thank you,
Thank you
Miroslav.
for letting me talk for an hour.